And good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss. Not really your boss, but anyway. And happy Friday. It's Friday, right? Boss, you're always lost. I am. Monday, Tuesday, Wednesday, Thursday, Friday. Wow, 19th of January, February, March, 19th of April. Wow. Time flies so fast. Alright everybody, welcome to the Professional Forex Trading Course 101. It's the foundational course where you are trying to get from zero to hero, right? You are trying to get from zero to a millionaire trader potentially in 3 years on average in an institutional way. What is that? As always, first the analyst, then the trader. And today we have the bonus lesson. What is your strategy, everybody? What are we talking about? What are we going to talk about? We've been talking about what is your strategy every single, every single module, alright? And so, everybody, we've been through lessons with the titles, the ABCD swing and the rules, the original Fibonacci and the ratios. So we talked about the original Fibonacci, then we talked about the contrarian Fibonacci, and then we talk about the confirmation Fibonacci. Hello Sam, how are you? Sam, I never asked you, how long have you been trading, Sam? I'm sorry everybody, I forgot, time to time I forgot to ask you, how long have you been trading, right? Alright everybody, so your strategy, okay, so my strategy, okay everybody, my strategy. So far you, the student, so the student analyst, so far you should have written, you should have developed and written rules that are, we're calling this black and white, meaning not subject to interpretation about, number one, what time frames are you going to trade, alright? Number two, what patterns are you going to trade? Number three, if and how you are going to use, trend lines slash counter trend lines. Number four, if and how are you English grammar. If and how are you, because it's a question, are you going to use support slash resistance, French resistance slash pivot points White Rabbit, hello. I have been trading on demo for about 3 years, but without professional learning like now. Believe me, man, he's the best. Wow, appreciate. Thank you, White Rabbit. Okay, Sam, when you are ready, give me a call on Skype, on email. All right? Because when the Fibonacci is over, then you must, and I'm going to explain to everybody, I'm not arrogant, you must come to the Forex course 202. So talking about support, resistance, pivot points. Number 5, if and how are you going to use candlestick formations, and candlestick formations. All right. Number 6, if and how are you going to use the market wave and the short-term trends. Number 7, if and how are you going to use the news events, and so star, when I say if and how, star, I mean you must explain the setups. All right, everybody? So far you should have developed and written rules that are black and white, meaning not subject to interpretation, about what time frames are you going to trade, what patterns are you going to trade, if and how you are going to use trend lines, counter trend lines, support, resistance, pivot points, candlestick formations, the market wave and the short-term trends, and the news events. Now let's see if I forgot something. Market behavior, structured trends, trend lines, consolidation, it's a pattern. All right, news events, time frames, multiple time frames, support, resistance, pivot points. All right, Japanese. All right, so for the Forex course 101, that's it. I already made some strategies, but in the end it makes me confused. Any suggestion, boss? Well, White Rabbit, are you in the Forex course 202? So everybody, next level, right? Next level, Forex course 101. If you want quicker results and not waste 2, 3, 4 years to figure out the market, ask for private lessons of the Forex course 101. But then, once you're over, if you want consistent results, learn the mindset and the heart set of the professional trader, ask for Forex course 202. It's a must, everybody. And I'm not arrogant. The institutional trader course, okay? If you've been around the block for 2, 3, 4 years or more and you are not making it, this is a must, because you are not stupid, right? Makes sense, everybody? This course, it's a must because me too, back in time, we are not stupid. But we are lacking some specific knowledge. This is from last year. Don't let 2023, now it's 2024. You know, not yet, Mike. Well, White Rabbit, you too. If you are 3 years in the making, 4 years in the making, everybody send me an email or say hello on Skype, because you know you need to move from the Forex course 101 into the Forex course 202. All right, everybody. I'm going to say something, I hope you don't misunderstand me. There are some secrets that are, and again, those are not secrets per se, but you have no videos on YouTube, TikTok, Instagram, Twitch, what else is there? Facebook, okay? There are some secrets, they're not secrets, but there is Forex course 202, okay? How JP Morgan Chase makes money, how Citibank makes money, Citibank traders, right? How Dukascopy Forex traders make money, all right? There are some knowledge that it's not taught. Make sense, everybody? This is why Forex course 202, it's a must. And I would wish if Jayvan is here or Melissa if it's here, you know, because you can talk to the guys and ask them, you know, is this really true? Like, oh, that there is something, you know, it's a secret or whatever. Okay, everybody? After you pass the learning phase, what is the learning phase? You know, you have your chart set up and ready for trading. You have a strategy in place. We're going to talk about this today. And you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. And now you don't need to be a winner, right? Of course not. So, Sam, you are welcome to join the Forex course 202 when you are ready. White Rabbit, you are welcome to join the Forex course 202 when you are ready. All right? It's a must. You are, again, you know, some people hate me for talking like this, you know, oh, you are arrogant. I'm not. There are some processes that institutions are doing, you know. We, the institutional traders, we are groomed differently in understanding compared to retail traders. Does this make sense? All right. So, your strategy so far, and today we are going to talk about rules about the Fibonacci's and White Rabbit, you know, talking about the strategy in the Forex course 202 we are learning. So do you have any suggestion? Yes, I have. Forex course 202 conversation. Your strategy must be in synergy with your personality. If your strategy is not in synergy with your personality, and it's not personal, the same applies to me, you are going nowhere. Does this make sense? It's going to be difficult. Okay? Now, we should have so far, so I have here strategies from some of the students from the past years, you know, and if I click on what? White Rabbit or Sam, choose a number, just randomly, you know, from 1 to 15. Then we're going to talking about the Fibonacci. I'm going to open mine. It's here, it's nothing special, you know, and just for you to see, just an example, you know, talking about the rules, but otherwise to see, you know, support, resistance, pivot point, you know, number 5. Wow, nice coincidence. 5, number 5. Who is number 5? It's in Portuguese. Another one, Marcos Bombassini. It's in Portuguese, everybody. You're not going to understand. Can we go to 6 maybe? Number 6? David, all right. David rules. David, this is from David, everybody. Okay, just for you to have a notion about, there is no right or wrong. This is your document, everybody, and it's a developing document. All right, this is number 6. You can choose another one too if you want. So There is no right or wrong. Who told you this, right? This is me telling him. There is no right or wrong anyway. Number 7, all right, number 7. Okay, wow. Okay, we're going to thank you, White Rabbit. We're going to through the 7. Okay, this is from Evgeny, and he's saying analyze the currency pair starting from the monthly time frame, going to the weekly, daily, and 4-hour afterwards. On every time frame put, you should have the monthly pivot points, as well as the weekly and monthly original Fibonacci. So he's using the original Fibonacci's. This is not a rule yet. Draw Fibonacci's market structure, meaning market wave, and shorten trend on every time frame. You should know whether you are in an extension or in a retracement on every time frame. Love this one. Put the relevant upper and lower band check on trade view because Forex is missing data. Agreed. No matter the trend, no matter the Fibonacci, once you see the market approaching the upper or lower band, reverse all the trading tools that you are using without exceptions. Love that one too. Checklists, things you want to see before entering a trade on your trading time frame, as well as your so checklist. This would be what different vocabulary, everybody. So this is for him, right? All right, this is his strategy, his vocabulary for him to understand. So checklist, he's talking about the setup. All right, so now he's talking about this one. When I say if and how, I mean you must explain, type in here, but we're not going to waste time. So you must explain the setups, how you are going to use trend lines and counter trend lines, how you are going to use support, resistance, pivot points, and if, right? How you're going to use candlestick formations, how you're going to use the market wave. Back in time we called it market structure. And short-term trends, how you're going to use the news events, if and how. So you must explain the setups. I have a question on the other streaming platform, everybody, and the answer is no. You take what you like. There is no right or wrong. All right, you don't need to use everything and anything. Just use what you prefer. Anyway, Eugen is saying, so on the daily chart, he wants to see, before entering a trade, Eugen wants to see bullish or bearish candlestick formations. I would add here closed. To be more specific, closed. The market is moving under its long-term trend line. Okay, that's okay as a rule. Market, sure, there is no pivot point between your entry and your take profit. That's okay as a rule, but it's a difficult one. You know, make sure there is no pivot point between your entry and take profit. So, what time frame are we talking about? Going to weekly, daily afterwards? He was not specific on the daily. Sorry about that. Daily time frame. So this is the confirmation, the daily is the confirmation time frame. Make sure there is no pivot point between the entry and the take profit. This is okay, but it's a difficult one. And now for entering in the direction of the original Fibonacci, you want to see confirmed C. So that's a rule talking about the Fibonacci, everybody. And confirmed with 100% market structure. Today we are calling this the market wave. Market wave. Yeah, I changed vocabulary because market structure today it's the monthly bands. So market wave. Now on the 4-hour chart, bullish and bearish candlestick formation, original or confirmation Fibonacci. So he is trading the original confirmation Fibonacci with confirmed C. Okay, so that's a rule for the Fibonacci. Make sure there is no pivot point between your entry. Make sure you enter in the direction of the shortened trend. Love this one. Only after long-term trend, counter trend line break, of the shortened trend, you are waiting for a reversal. Confirmed market wave. The market is in a structural and short-term extension. All right, so it's moving from C to D, and I believe this. Let's see. I believe this is too much anyway. Trade the contrarian Fibonacci only when the original Fibonacci on your trading time frame is the Fibonacci of the confirmation on the daily, weekly, or even monthly. This is a great rule, but it's not well written, everybody. Alright, trade the contrarian Fibonacci only when the original Fibonacci on your trading time frame is the Fibonacci of the confirmation. When we are having monthly or weekly, even daily original Fibonacci without confirmed C, we can still enter a trade against the long-term Fibo if we are having confirmed C on the 4-hour chart. Why against the long-term Fibo? You know, this makes no sense. But anyways, he's saying that, you know, when you have a confirmed C on the original Fibonacci, you can go long even if you don't have a confirmed C on the monthly, weekly, and daily. So this rule is alright. When trading sideways movements, do not enter a trade against the short-term trend before you see the market approaching one of the levels on which the market has reacted, pivot point, most of the time. So he's trading consolidations. Wait for counter trendline break and use small Fibonacci on the short-term trend to encompass your stop loss and take profit. Okay, so he's using the small Fibonacci inside consolidations. Alright, there is no right, everybody please understand, there is no right or wrong, alright? You know, when you are talking to other traders, the only thing that you are not allowed to ask is why did you put this rule, alright? And don't fight, oh, you know, my rule is better than yours, and my strategy is better than yours. Alright, everybody? Why, boss, why? Because the strategy is personal to the trader. That's the why. Alright? You are going to build, White Rabbit and Sam, you are going to build your strategy. Okay? And it's personal to you, so take what you like, reject what you don't like. There is no right or wrong. Number 4, if you see the market approaching some level of resistance, support, pivot points, or the extension of the original weekly or monthly Fibonacci, do not enter. So there is another rule. Okay, so again, approaching some level of resistance, not clear. You must define a number. Example, 100 pips. Alright, everybody? If you see the market approaching some level of resistance about 100 pips, or support 100 pips, or pivot point, or the extension 100 pips of the original weekly or monthly, do not enter. So now this rule is well defined, it's not subject to interpretation. Number 5, do not enter trades with risk-reward ratio less than 1 per 1.5. So this is Forex course 101. In the Forex course 202, we are going to improve. You're going to learn risk management strategies. Okay, risk-reward ratio is not going to be an issue anymore. And do not enter trades with risk-reward less than 1 to 1.5. Preferably enter trades with, so preferably it's not good. Okay, everybody, you know, it's subjective, right? It's subjective. One trader is going to do something, another one is going to do something different. Number 6, enter in the direction of the original Fibonacci on your confirmation time frame, unless your original Fibo on the trading time frame is a contrarian Fibonacci of one of the highest time frame. This makes sense? This makes sense. All right. Number 7, if you are trading on the 4-hour time frame, you can enter against the original Fibonacci on the daily, only if the daily Fibonacci doesn't have a confirmed C, and the original Fibonacci on the daily, it's actually contrarian Fibonacci on the weekly. So yes, this is just an example. If you're trading on the 4-hour chart, you can enter against the original Fibonacci on the daily. Okay, so he has a rule, right? This is the daily. This is the daily, and this is the 4-hour chart. No, there is no right or wrong. This is the 4-hour chart, and his strategy is saying if you are trading on the 4-hour time frame, you can enter against the original only if the daily Fibonacci doesn't have a confirmed C, and the original Fibonacci on the daily, it's actually contrarian. So he's looking at the greatest force, right? So you have a weekly, you know, you have a weekly going down. Boss, this is too complex. Write in a language, everybody, that you can understand, all right? So this is the weekly Fibonacci, and the weekly Fibonacci is in a retracement like this. So this retracement is the daily, all right? So this circle on the weekly, it's a graphical representation of this circle on the daily. And of course, if the weekly is down, it's just a matter of time, you know, that the market is going to reverse and push down. And this is where Evgeny is saying, if you are trading on the 4-hour time frame, you can enter against the original Fibonacci. But not if the original Fibonacci has a confirmed C. This is his choice. Don't ask me why, I don't know, you know. So this, if this would be the case, you know, if this would be, whoops, if this would be the case, Evgeny is saying, well, I'm going to short the 4-hour chart. I'm going to short the 4-hour chart. I'm going to go against the original one. I'm going to go against the original Fibonacci because it doesn't have a confirmed C. It's his rule. There is no right or wrong on the strategy. It's his rule, you know. But this original Fibonacci, it's the contrarian. Is the contrarian on the weekly. And this rule makes sense, right? Because Evgeny is positioned in the direction of the greatest force. Trading on B2C. ABC. White Rabbit, we should trade from C to D really, but I'm not sure what time frame you are referring right now. If you could be more specific. Trading from B to C, so B to C, oh, maybe the daily. All right. Number 8, if you are waiting for the market to reverse for some reason, pivot point, completed the extension, weekly, monthly, upper or lower band, wait for the market to break the last structural support or resistance level on your trading time frame. Waiting for, so this again, this is subject to interpretation, everybody. It's not a good rule. Number 9, you can enter original Fibonacci without a confirmed C on the daily in the short-term trend on your trading time frame if the market touches a pivot point or support resistance level and you have a counter trendline break on the short-term uptrend before the market completes the contrarian fib of the extension, which will confirm the C. I believe this is unnecessary, but anyway. Risk half percent if you're entering according to the upstated Fibonacci with no confirmed C rule. Weekly. White Rabbit says weekly. No, White Rabbit, we are trading from C to D. So A, it's a down Fibonacci. A, B, C. So when he is shorting, when he's going against the daily original Fibonacci on the 4-hour chart, you know, he's trading from C to D. Does this make sense? Does this make sense? He's trading this one, the smaller one, and the alignment, keyword in the Fibonacci Mastery course, the alignment, it's this contrarian, it's aligned with this contrarian, and it's aligned with this original, and of course, also the confirmation. All right. Now, let's see the rules of my strategy. Talking about the Fibonacci. Just for you to have an idea, everybody, all right? So I will trade the market according to the parameters of the daily Fibonacci. So my personality is a swing trader. I will trade sweet spot zones, retracements from B high or low from the 1 extension or 1 to 7 to the 3H retracement on the daily chart. Of course, for the 118 and 1 to 7, the rule is that the market didn't retrace already to the 3H retracement, okay? So what does this mean? And again, this is just an example. What works for me might not work for you. So here you have the extensions, the red one, you know, and what I'm saying, my strategy, is that if the market is in here somewhere, you know, that according to the setup, I can trade from here to here. All right? With the premise that the market did not hit or touched this level before. That's the premise. And so even if the trend on the daily chart is up, making higher highs and higher lows, I can enter selling the sweet spot zone, it's just vocabulary, on the daily from the 2-hour and the 4-hour chart. All right, now today it's 4 hours, you know. Now, sweet spot zone entry rules. I will enter only when the market closes a low, in this example, not necessarily a candlestick formation from the daily chart, and shows a crown on the 4-hour chart or below, counter trendline break, candlestick formation on the 4-hour chart, at some level of past support, resistance, pivot point, market wave on 4-hour chart in my direction. If not, I can enter a short-term trade to support resistance. So I need a bearish candle, you know, or a high. I will enter only when the market closes a high from the daily chart and shows a crown and counter. So this is the daily, right? That's the daily. And before I'm going to short the market from here to here, my strategy, which is nothing special, you know, I want to see, just an example, I want to see a high, right, which is a central candle with two candles on the left and 2 candles on the right with small or low values. Just an example. not, I mean, it could be candlestick formation too, but not necessarily. So I need to see a high, and this high should translate as price action, should translate to a crown on the 4-hour chart. So if this is the daily and this is the 4-hour chart, and counter trend line break, candlestick formation on the 4-hour chart at some past support. All right, so talking about the 4-hour chart, you know, I need the crown, which is in here. If I am fast enough, you know, then this is going to be the counter trend line break, and I'm going to enter here. Just an example, right? And this crown, this is going to be the candles, right? This is going to be the high from the you know, this is this one from the daily, right? This is going to be this one, and this is going to be this one. So the crown on the 4-hour, it's in here really, right? So something like this. If we change colors to the blue, all right, so this is the crown on the daily. Counter trend line break in here, change colors. Do I need to have anything else? Candlestick formation. Before I enter, I need to have a candlestick formation too. So now this time it's a requirement. I need to have a candlestick formation and some past support, resistance, pivot point, whatever. All right, so there is a pivot point, just an example, of course. Just an example, and here and here, and it's going to be like this and like this. Didn't work. One more time. I want to be like this, and I want to be, there you go. Pivot point, candlestick formation, counter trend line break from the strategy. Market wave on the 4-hour chart in my direction. If not, I can enter a short-term trade to support resistance. So those are the rules, you know, that so I can trade talking about the Fibonacci. And remember, everybody, this is no suggestion, no advice, okay? We are here to learn. So this is the trade from the 127, 118 to the 618 on Forex. All right. Yes, TradingView has different numbers. It's inverted, so it's not 382 on Forex. On Forex, the first one it's 618 number. All right. So this is the sweet spot trade, just vocabulary from a strategy. And 2.2, I will trade the extension zone on the daily chart and the 4-hour chart. The extension zone is defined on the daily when the market makes bullish bearish candlestick formation on the daily chart at some level of support or resistance pivot point and breaks the trend line or counter trend line. So after the market falls, just an example, you know, and goes like this and here, you know, and does something like this, just an example, then I can go long if the market makes bullish candlestick formation and it breaks a trend line or a counter trend line. So we are going to change colors. Come on, there you go. So this is now just an example, right? This would be a bullish candlestick formation. We learned about candlestick formations in the previous lessons, you know. So this would be a bullish candlestick formation. I'm going to delete this one. So I have a bullish candlestick formation with the counter trend line break. I need to see also from the previous price action, right? That the market, all right, it's like in this, and I can see, all right, this, you know, this bullish candlestick formation happened at past support, just graphically for you to understand what I'm talking about. So all the requirements are in place, everybody. You can clearly see a crown on the short-term trend to relevant highs and lows, and a change in trend direction from the 4-hour, 2-hour, 1-hour. So today it's 4-hour. I don't have time today anymore to go on the 2-hour chart, 1 hour. It's from the 4-hour chart. 2.3, I always check what are the highs and the lows doing on the daily chart near the trend lines for not to enter into a trap. Example, bullish candlestick formation below the trend line, which signals the market ready to go from one trend line or the other. So what does this mean? What does this mean? So this was from before. Give me a second. So if this is the daily, right? If this is the daily from the 4-hour chart, you know, I must see now a change in the trend direction. All right. And Sam, give me a second. And crown on the short-term trend from on the 4-hour chart. So I need to see a crown on the 4-hour chart too. And here is the crown, everybody. Left tip, center tip. This is then the crown. And we are going to do it like this and like this. That's the 4-hour chart. No, I'm not trading the Fibonacci on the 4-hour. I'm trading the Fibonacci on the daily. I'm just using the 4-hour to enter. Sani saying, when I'm ready, I will join the 202 course, but I need some time because I'm so far in my knowledge. Sure, no rush. White Rabbit, when I'm going to enter a trade, I always seek for where should I put the stop loss. Is this okay? No, it's not. Pen and paper, White Rabbit, right now. Pen and paper. Everybody making, when you, it's Friday, right? Let me give you good news. Making money in the Forex market, when you understand how this market works and when you obey the rules, and right now I'm going to give you a rule, White Rabbit, becomes easy. Becomes easy and becomes boring and it's always the same. Okay, White Rabbit, you must put a rule on the strategy, you know, for you not to seek where to put the stop loss. Does this make sense? Write down a quote, everybody. Professional traders don't think, they just execute. Professional traders, where is the advanced course? Here. Institutional course. Where do we have the quote? 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 This is from Forex course 202. Professional traders don't think, they just execute. All right? Do you have pen and paper, everybody? All right. So for you not to seek, there is a golden rule. Stop loss goes on the pattern traded. Write this down, everybody, 100 times every day. Stop loss goes on the pad and traded. Stop loss goes on the pad and traded. Stop loss goes. You are going to be sick and tired of me telling you in the Forex course, choo. Stop loss goes on the pad and traded. Oh yes, but I don't want to hear yes, but. Those are the rules of the Forex market. Alright? Stop loss goes on the pad and traded. Yes, sure, different strategies, advanced trader, a scalper is a different animal. Alright, but when you go on the 15-minute time frame and above, stop loss goes on the pad and traded. If you are trading the Fibonacci, whatever Fibonacci trade, stop loss goes above or below the A. Yes, but there is no yes, but. Those are the rules. If you are trading the market wave, back in time we call this market structure, stop loss goes on the previous low. Oh yes, but there is no yes, but. Those are the rules. If you are shorting the crown, stop loss goes above the center tip of the crown. Oh yes, but there is no yes, but. Those are the rules. If you are trading consolidation, I'm shorting USD CAD right now, consolidation. Stop loss goes 15 pips above the highest high. Just an example. Up in here or and down here too. Oh yes, but there is no yes, but. Those are the rules. If you are going long on the short-term trend, stop loss goes below the previous relevant low. Oh yes, but there is no yes, but. Those are the rules. This course, Forex Course 101, it's worthless unless you can implement the habit, the rule that you are going to put the stop loss on the pattern that you are trading. White Rabbit, does this help? And if you don't do this, everybody, now you can see why you might be losing on the demo account, hopefully. Those rules are for a reason, right? What happens... Now let me push your ears, it's Friday, right? Let me yell at you a little bit, everybody. If you don't... I'm joking, of course. Let me yell at you a little bit. If you don't put the stop loss below the A, if you put the stop loss in the correct place on the market wave, if you don't put the stop loss in the correct way on the crown, consolidation, and or the short-term trend, you are trying to outsmart the market. Boss, can you repeat please? If you don't put the stop loss on the correct place, every pattern has its own rules. You are consciously and sometimes subconsciously, everybody, you are trying to outsmart the market. And if you are doing this, how is trading going for you? Huh? How is it going? Trading should be fun and no stress. And you are trying to outsmart the market, you know. Boss says stop loss below the A, but you are trying to outsmart the market and you put the stop loss in here. And the market is going to take your money and is going to do like this. Boss says put the stop loss on the most recent relevant low on the market wave. You are entering up in here, counter trendline break, and you are going to try to outsmart the market, you know. You're going to put the stop loss in here. Me and the market, we are going to take your money, going down to here, and then we're going to reverse and go up. Boss says put the stop loss above the crown, the center tip. You are going to enter here. You are going to try to outsmart the market. This is going to be your stop loss. I'm going to take your money. Me and the market, we're going to take your money in here. And then the crown is going to reverse. And so on, and so on, and so on. Exactly. For me to make money, somebody must pay, right? We don't talk about this much in the Forex course 101. This is more about the business understanding. You know, for me to make $10, somebody somewhere around the world, it must lose $10. Make sense? No, the broker is not going to give you money. No, no, no. The broker is going to take the commission, whatever may be the case. But for me to, for me to make money, to withdraw somebody somewhere around the world, it must lose. Does this make sense? Oh, I hate you right now. It's true. You are trying to outsmart the market. I'm taking your money here and then it goes. You're trying to outsmart the market. Right? Everybody, there is a great book that covers the thinking about psychologically you and the market. It's called Best Losers Wins. Let me see if I go on Google, everybody. It's not a Forex course 202 book, but it's a Forex course 101. Best Loser Wins. Best Loser Wins. Images. Image. Give it a second. So this is the book, everybody. This would be a book suggested for Forex course 101. All right. It covers a lot about this, how retail traders, beginner traders are trying to outsmart the market. Trading should be fun and easy, and we have all the rules that makes money, like we just finished. Fibonacci has a tradable edge. It wins 7 times out of 10 if you would just put the stop loss below the A. Guaranteed. Alright, everybody, I believe we finished strong the Friday lesson. Have a great weekend, everybody. Remember what you're trying to do. You're trying to go from 0 to a millionaire trader in 3 years. Like 0 meaning no clue about anything. Alright, completely new. Alright, in an institutional way. Okay, this is what you're trying to do here with me. First the analyst, Forex course 101, then the trader, Forex course 202. Have a great